Hey everyone, welcome. Welcome back to Sally Boyle Wealth Planning. Today we're going to talk about the One Big Beautiful Bill Act. You've been hearing a lot about it. And if you're feeling a little overwhelmed, you're not alone. Anytime there's a tax law change, it feels like a labyrinth of confusion. But today what we're going to do is we're going to cut through the noise and talk about the one thing that you can do to take advantage of this bill and prospectively realize thousands of tax dollar savings. Now, there's been a lot of talk in this bill about the big stuff, the fact that it made the tax adjustments permanent, those tax brackets that were lower. And it also temporarily boosted the SALT deduction, that deduction for your state and local taxes. But what a lot of people are missing is even both of these benefits are dependent on something else. And it all comes down to one acronym, and that is your MAGI, or your Modified Adjusted Gross Income. Now, before you run away thinking this is going to be some nerdy discussion, stick around, because with a little bit of understanding of this, unlocking the mystery around your MAGI could be the key to unlocking these tax benefits associated with this bill. So if you don't know what it is, and more importantly, how you can anticipate it and adjust it to allow you to qualify for some of these deductions or credits. Because if you do learn a little bit about it, it could save you in taxes. So let's break it down to something that you do know and you probably are aware of. And that's another acronym called your AGI, your adjusted gross income. And you know your adjusted gross income, that's a number that actually shows up on your tax returns. So your AGI is all of your income sources: paycheck, W-2, business income, side hustles, dividends and interest, and even a few other, your rental income. But all of this income is adjusted by what we call above the line deductions. And the reason that they're called above the line deductions is because they are the deductions that show up on your tax return, adjusting your income for you to come to your adjusted gross income. Things like student loan interest or contributions to a traditional IRA. The AGI number is the number that lands in line 11 of your 1040. And it's a big deal because it determines a lot of your eligibility for other tax benefits like deductions and credits. And I'll give you an example. Your dependent care tax credit, which is a tax credit that directly reduces your income taxes. It's a credit, not a deduction. That credit is dependent upon your adjusted gross income. And the maximum credit, so you take all of your dependent care expenses and you take a percentage of those expenses, and that's a credit against your income taxes. The maximum credit percentage is 35% for lower incomes, but it gradually decreases to 20% for incomes under $43,000 and remains level there. So your adjusted gross income determines the percentage of your dependent care expenses that end up to be a credit against your taxes. Okay, so if your adjusted gross income is the appetizer and your modified adjusted gross income is the main course, let's dig in there. Because your modified adjusted gross income starts with your adjusted gross income. You add back in some deductions and exclusions that you may have taken, such as tax-exempt interest, and you add those back in. So that means that your modified adjusted gross income is almost always higher than your adjusted gross income. And that's really where this tax legislation gets interesting, because the One Big Beautiful Bill Act has two major new benefits that are tied directly to your MAGI. The first one is this temporary increase in your SALT deduction. And the second is the brand new temporary deduction for seniors, $6,000 for individuals, $12,000 for couples, where both of them are over 65 years of age. So all of this sounds great, right? Except that both of these benefits start to disappear when your modified adjusted gross income goes over a certain threshold. So it creates somewhat of a tax torpedo. In fact, the SALT deduction is called a SALT torpedo, because what it means is that when your income goes up, then your deductions go down. You're already paying higher taxes on the higher income, but then your higher income limits your deductions, so you're paying taxes again. So it's almost a 1-2 punch. At least that's how people are starting to look at it. So it's called the SALT torpedo effect. So what does all this mean? The SALT deduction was $10,000 under the old law, and this new bill allows it to go up to $40,000. But for those folks who have incomes above $500,000, that additional deduction starts to get phased out. And it's fully phased out when you are at modified adjusted gross income levels of 600,000, so that when you hit 600,000, that SALT deduction goes right back down to the original 10,000, which almost makes it the original deduction anyway. So as your income or your modified adjusted gross income climbs, you don't just pay more tax on that new income, you lose your ability to take these deductions, which also pushes your taxable income up. So let's talk a little bit about strategy and how you can address this. The first thing to do in strategy is to anticipate your modified adjusted gross income, to project what you think it's going to be. And more importantly, then once you know what you think it's going to be, how you can lower it to maybe allow for all or some of these deductions. First, how do you anticipate it? Well, that's relatively simple. You go right back to last year's tax return, take yourself down to line 11, see what your adjusted gross income is, and start there and make your modifications. What's the number? Where does it stand in relationship to some of these limitations? And are you going to need to make adjustments to reach your modified adjusted gross income? Now, once you determine what that number is, you can start evaluating your deductions. And the above the line deductions that will impact it are educator expenses, which you're probably taking, but what people sometimes, and student loan interest, as well as alimony payments on agreements that were entered into before December 31st, 2018. But what a lot of people don't start to look at again, if you're self-employed, do you have the sort of plan that allows you to maximize your deductions so that you can impact your adjusted gross income? So self-employment retirement contributions can make a significant difference in, and that's an above the line deduction. The other thing is, even if you're participating in an employer-sponsored retirement plan, sometimes you can also have an individual retirement plan where the contribution there is deductible. So evaluating that is another kind of above the line deduction that would give you that would impact your adjusted gross income and then your MAGI. But the things that don't show up on your tax return that can have a significant impact on your modified adjusted gross income are you maximizing your 401k contributions? Can you take that traditional IRA contribution in addition to that? Can you open a health savings account? Do you have one? If you do have one and you're putting money into it, are you maximizing those contributions? All of these kinds of things will adjust your modified adjusted gross income. So in conclusion, while the OBBA has some very high level or high headline benefits, you need to be certain that you can take care of those benefits, take full advantage of them. And your ability to take advantage of them will depend on your modified adjusted gross income. So your homework for this week is to pull out that tax return and see where your adjusted gross income falls. If there's any modifications that need to be made to come to a modified adjusted gross income, and then see where your magi relates to these particular brackets where there may be some exclusion of the benefits if it's higher. So try to get that magi to the point where you qualify for most of these deductions and credits. And if you want to dive deeper into this, new senior discount or SALT deduction, we offer complimentary consultations, tax consultations, so you can reach out to us and schedule an appointment on our calendar. And don't forget, if you'd like this kind of information, subscribe to our channel and give us a like on it. Thanks very much.